All right, boys. It has been a while. Yes, it has. Except this time I come with the greatest of news. Instead of trying to tell you about the market's about to crash, we're finally going into the final market rally. The final blow off market top. What had happened the last month or so was the stabilizer to the downside, preparing for the correction. And this is now in a euphoric, unstoppable uptrend for the market. I'm going to go over the market real quick and the meme stocks. We'll do the market real quick, the S&P. We're going to get, as of right now, we're going to get a really sharp November spike with an everything rally in the market. Meme stocks, cyclicals, boomer stocks, everything. FANG, everything will go. Then we get probably consolidation into December. Nothing crazy. And I'm expecting probably a blow off top in January for like the wick on the yearly candle. Just as of right now, we are just in a euphoric market top, an unstoppable one. It's not going to get derailed. It's really not. We just went overbought on the daily for the S&P. What I would expect to see today is some sort of retest of this. So it went to overbought for the first time in a while in a very healthy way. If we get volatility today on the taper talk, whether it's an announcement or they're going to do it in December, whatever it is, you buy the dip. You want to play the move, whatever, it doesn't matter. I would play the move after. If it drops, then you'd play the move after. Russell will outperform the S&P. The Russell has underperformed the S&P. It's like the worst underperformance in over 10 years, as well as a 1 year of consolidation. I've been saying for like weeks now how the Russell is going to be breaking out and outperform the market for like a couple of weeks, maybe even a couple of months. That's starting to break out. This is a stabilizer. This move here, I don't want to have to go through everything, but this move here was a stabilizer to the downside. This is the face of the downtrend. This move right here, not even the Evergrande move. It's hard to explain, but this was actually a bullish drop. This was actually the downtrend. You could see it on UVXY hourly. See that? This is the highest hourly volume in UVXY history right here. And then the market literally stopped trading. See these gaps? It literally stopped trading. The time and sales didn't go through for like 2.5 hours from here to 1 p.m. And then it started trading again. That only happens at major market tops and bottoms. This happened last year. It happened January 29th. Of 2021. Yeah, January 29th was the last time this happened in the S&P. Now this happened both in all the market and in all the indexes and UVXY. ETFs, they stopped trading for 2.5 hours. It was really weird. And lo and behold, it was a top. It was a top of momentum. Haha, how about that? Right? So it was the market like really getting compressed to as far down as it could on the highest volume ever. That is a stabilizer. That is the face of the correction. I even said it. I literally said it here that you're going to get the face of the correction coming. And we freaking got it. Like we literally got it. So that is the face of the correction. So should we be scared? Not yet. Not yet. This is the face. All this volatility is what's coming. I expect the S&P to go to at least 480-ish. 480-ish. We might not get there this year, but then you get an overextension in January or February. That's to be determined. Just as all that matters right now is for the next 3 to 6 weeks, we're going to rally really hard. That's all you need to know. After that, it doesn't matter. We'll figure it out as it goes on. For the next 3 to 6 weeks, we rally really hard. Buy everything. Meme stocks. Okay, GameStop, this is probably the most important thing you want to look at is GameStop had a choice right here. This is the uptrend, literally right here from January. It broke it, it bounced off of it, and then it broke it. Here I was saying in 30 to 45 days, in my last video I made like at the end of August, 30 to 45 days, that it would start moving, and that it did this. And what this does, because it didn't go within about a month period, all the meme stocks, this took 3 months to complete. I now see the move going in the meme stocks much longer in amplitude and duration. Doesn't have to go up that much more in amplitude price-wise, but the duration, it means that there's this much more momentum built into it on a price parameter. And just the fact that it did this, just my experience knowing that this is going to go on for a lot longer. So next year is going to be very, very, very volatile in these meme stocks. You're not going to get this. You're going to get crazy price swings, like up and down $50 a week instead of just this nonsense consolidation. But I think it'll be in a downtrend. It'll look bullish, feel bullish, but it'll be in a downtrend rather than a slight uptrend. It won't be anything crazy, but so anyway, something very, very important happened here the other week. Something very important. People don't realize this. But it had to choose between the bull wave and the bear wave. It broke the uptrend from here. I'm just going to look at it real quick, right? So if you do this right there, right, like that, it breaks the uptrend. And then the September 30th massive spike happened, right? Right into the zero line. And then it started behaving weirdly, bearishly, bullishly. And so it was very toxic, very hard to figure out what is it trying to do. And then if you look at January 200 strike, this is how option charts behave. Okay? This is how option charts behave. This is GameStop in January. This was the drop. There's a gap here. Look at what we just filled. Okay? Notice how this is lower than here, but on the chart itself on GameStop, the price here is higher than that. So why did this happen? Because it went sharply down. This is when like the Trump SPAC, I think, exploded and people sold off to buy it. Gotcha. So anyway, fill the gap to the T, to the freaking T, to the T. And instantly, look, see how it was about to cross on the MACD, but filled the gap and now it's starting to reverse. Clean. That is what you call clean. Nice volume started to move, which that means is, what that means is, this is a classic bullish pattern for a call option, long dated call option, where you have an initial spike and then you consolidate. This could consolidate for like 6 months, a year. It could consolidate for a long time. And then you have a spike here and it leaves a gap. But when you fill that gap somewhere in the future, sometimes it takes days or weeks, not 6 to 12 months. But it is what it is. But when it fills that gap and it triggers, and you can see the trigger, the next stop to go is the high. The only other place for this option chain chart to go is all-time highs, which puts GameStop at all-time highs, which this would have been about a 1,500% gain. About a 1,500% gain from here. And that's at least. At least. It could go through it. It could make a wave through it, but when you breaks it, that would be, you're definitely selling a lot of it, if not most of it, if not all of it, you know? So that's very, very important. So as long as this holds, and GameStop doesn't get smacked right here, on the Fed taper announcement, something like that, as long as it doesn't get smacked and get wrecked, that's the thesis right now. The only other pattern that I see on like a 1% probability here is that this candle here in the fourth quarter does something like this. See this? So we're right now creating the upper wick. If somehow it sells off, 132 is worst case scenario. And then there's also a gap at around $90. That would be worst case scenario. 90 to 132. It would create something like this. And I expect a correction in the first quarter of 2022 after this euphoric rally, which would trigger the meme stocks. So if that happens, this next quarter, it's going to activate and it will go through all-time highs. That's possible. That's a possible wave cycle. Very unlikely, but it's possible. Just realize it's, you know, if you're going to hold, what you're holding through. If you're trading weeklies or whatever, or monthlies, just understand where it's going. We've been waiting for this activation for literally months. We've been waiting for something to trigger this into this bullish pattern, and we got it. It filled the, look at this. This is the GameStop 200 strike. It's higher, but the GameStop thing went lower. It actually went lower to fill the gap. And so now it's activating. Looks very, very, very clean. We needed a trigger. You need something to start this all off. Something to start this all off. Bed Bath & Beyond happened yesterday. That might have started it. That might have started it. It was funny how we were saying that this looks actually really bullish. How it filled the gap. And this could really run. This is so troll. This is so troll. So this might actually fill the gap. Because a lot of stocks started spiking with it. Like this. Like you need a trigger. So AMC, again, that spiked. Look, gap, fill the gap, failed. Gap, fill the gap, failed. If it's bullish, it has to break this pattern. It has to break through it. And we just broke it. 40.84. So you broke out of it. Probably retest it. Thus far, you're getting back decross, going to earnings. And it looks good. It looks good. It looks clean. It looks like what you'd want to see. Very, very type of trading. Broke the uptrend. Type of trading where, you know, people get sick of it, bored of it, tired of the BS, and they just sell off. Like, that's what you'd want to see. So everything kind of fit into place. It's looking good. And I think all the meme stocks explode. Again, like Rocket looks so disgustingly... The coil on this stock is ridiculous. Actually ridiculous. Like the Rockets, the Nakeds, the Tilray, the GameStop, the AMC, the BlackBerry, the Clove, the Clean Energies. And if you notice, the last couple of weeks, all the stocks that peaked in February are all starting to break out. Weird, huh? Weird that all the stocks that peaked here are all starting to break out. That's not a coincidence. A lot of these stocks were ready to go in this summer, but they coiled back down and didn't go. They're actually a slave to the market algorithm for this everything rally. That's why it did it. We didn't know why. It was being really toxic and that it could just keep doing this, and it did it because it's waiting for the computer algorithm for the last market rally, because they're all going to go together. Because if these meme stocks are going to explode, they're not going to go up and to the right, up and to the right, up and to the right, nicey nice. They're going to do something like this. They're going to get everyone to sell off, and then it's going to really, really go really quickly in a short time frame. Like, that's what you want to see in stuff like this. Like everything's starting to go. Like, so, and this go plug and the energy, right? Like all this stuff. Like, so that's what you need to know. So the thing that I'm looking for is the January 200 strike on GameStop to break its all-time highs by January, right? So I would expect the 1% probability is it drops down to here, but the high probability is that it breaks all-time highs, pulls back. So once you break a previous high like this after a long consolidation, you almost always get a pullback. So if it breaks it, the algo's trigger, it starts to pull back, and then we get a correction, and then the big spike happens. That to me is a very, very clean and healthy wave. Like, that's what you would want to see. However long this takes, breaks the all-time highs, it could flush through it, 400, 500, 600, wherever it goes, but pulls back, looks bearish, feels bearish, coming back down, maybe even like retest something like this. Like, that's the high, that's the high, that's the high. Kind of like goes through it, overextends, and then we get the market correction, and then boom, and then you get like a massive gap up or something, and then you get... I can't tell how high GameStop's going to go. It's actually pretty insane. I can't tell how high it's going to go. All I know is the wave dynamics and when to get in. So like if we were going to buy him, we were going to buy him here off of this. Once it started acting, like if you look at this, look, this bottoms right here, right? It fills the gap on the option, and look at the MACD. Instantly goes from a very negative bearish trend. This is very, very bearish, into bullish. Just kind of relentlessly bullish. Up and to the right, up and to the right. Retest the zero line. Clean. That is a really nice coil. Like it's just behaving very bullishly. So it's very, very healthy, very clean. It is what you want to see. So enjoy, guys. Hold. Don't sell off on the Fed. Ride this into the sunset. Just understand what's possible, the waves that I just wanted to say here. So breaks all-time highs, pull back. And we'll see what happens. We'll make another video once this starts getting out of hand and everything starts breaking out. GameStop all-time highs. And congratulations, guys. It's looking good for you. It's looking pretty good for you. Yeah, this is bouncing off that top. Looks really clean. Okay. So market up, memes up, everything up. Hold. Don't sell into this, guys. This is where you hold and you collect your money for at least, what is it, 3 to 6 weeks? At least 3 to 6 weeks. I'm expecting about 6 weeks here into the middle of December. We should hold strong into December. All right. Until next time.